Hello everyone and welcome to our podcast on All Matters Financial from Pareto. Today's podcast is on protecting your business. Our guest speaker today is one of our advisors at Pareto, Jamie Hogg. Jamie, would you like to tell us a little bit about yourself?
Yeah, hi Stuart. I've been at Pareto for 6 or 7 years now, one of the advisors here. Work with a couple of our key introducers from the accountancy side of things and a general insurance side of things as well. So see a full range of clients from business owners to individuals. So a bit of everything really.
Great, thank you, Jamie. For our listeners, do you just want to run through what we mean by business protection?
Yeah, so kind of exactly what it says on the tin. It's about protecting the business. It's protecting the business if something happens to an individual within that business that is going to affect the finances going forwards. It might be key person, so if there's a key individual who provides a lot of the income or provides a lot of knowledge that would be difficult to replace, and there'd be a financial impact of them passing away or having a critical illness, for example, you might want to take out some protection to cover that risk. We're also talking about shareholder protection, whereby you've got a couple of shareholders, for example, within the business. If one person passes away, what do you want to happen to those shares? And business shareholder protection can provide a lump sum to be able to allow that business to continue to run in the event of something happening.
Great, thank you. And with regards to the risks of companies and shareholders and business owners, directors, etc., not taking out this cover, do you want to just run through what the implications are of companies not taking out this type of protection?
Yeah, so we'll start with key person. The big risk with key person is that one of those key individuals is obviously no longer able to work, whether that be through death or critical illness, as earlier mentioned. There's a number of things that can affect. It could be profits, so you can take out cover to replace potential loss of profits. It might be a loan, so key person loan protection, whereby a loan would need to be recalled in that situation. So again, take out some cover to protect that risk. Or it could be to replace that person in terms of the cost of hiring a replacement, training a replacement, perhaps getting a consultant in to do that job, which might be a lot more expensive than that individual that was there previously, but at a time where cash flow might be struggling. So the risk on the key person side kind of covers quite a lot of things. The risk on the shareholder side of things is more to do with the families after death. So if a shareholder dies and 50% of the shareholding goes to an individual that is not necessarily involved in the business and doesn't want to be, that kind of doesn't work for the remaining shareholder or the individual. So shareholder cover tends to protect the risk of kind of that continuation of that business after death, just making sure everyone's in the place where they're happy with what they've received.
Great, thank you. And how would you suggest that our listeners put a value on how much they should be insuring a key individual shareholder protection or alternatively relevant life policies?
Yeah, so shareholder cover is relatively straightforward in the sense that you would want to insure them for the value of their share. The way that it tends to work is that you would take out a policy on your own life up to the value of your shareholding in the business. You place that in a trust for the remaining shareholders, and that pays out into that trust on death. So that's relatively easy to quantify. Key person can be a bit more tricky because there's not necessarily an easy way to calculate how important somebody is from a financial point of view to the company. There's a few calculations you can use. Multiple of turnover, a multiple of salary, particularly on the cost of replacing them. If they bring in a certain amount of profit per year, again that can be used. You mentioned relevant life cover as well. I've not gone over that yet, but essentially relevant life cover is a single person death in service policy. So where there's not a group death in service scheme, but you wanted to offer some life cover to a director or shareholder, whatever it might be, as long as they're an employee of the business, then the company can take out a policy for them. Again, that tends to be part of an agreed remuneration package, so the amount is up to up to the company in a way, but tends to be linked to roughly how much they're earning, multiple of salary, that kind of thing.
And a relevant life policy, what we've just mentioned,
Mm-hmm.
can be quite tax efficient in terms of providing a benefit for shareholding directors and their families.
Absolutely, yeah. So the cover itself, again, it's owned by the company, paid for by the company, and placed in trust for the beneficiaries of the life assured. Because of the way that it's set up, there's no the company gets corporation tax relief on the premium, and there's no P11D benefit in kind for the employee. So from a tax efficiency point of view, it's a very, very tax efficient way of setting up some personal cover.
Great. And in terms of cost for taking out this cover,
Mm-hmm.
one of the big barriers that people perceive is life cover and critical illness is expensive.
Yep.
What would you say to any listeners out there that are thinking, I might need this, but I don't know how much it's going to cost. I know it's going to be expensive. What would you suggest they do?
Well, I mean, expensive means different things to different people, doesn't it? £2 per month is probably quite cheap. £2,000 per month probably quite expensive. But the easy answer is there's no way of knowing until you kind of sit down and work out what it is you're looking for, and then put some quotes together. It'll always be based on the age and kind of health status of the individual that's being insured. So obviously the younger you are, the cheaper it is. The older you are, the more expensive it is. But as I say, you've no really way of knowing that until you sit down and get those quotes together. So would always suggest having a conversation, looking at what it might cost. And as we always say, it's expensive until you need it. And then when you need it, it's the best money you've ever spent.
So with regards to the types of cover that our listeners, if they are thinking about taking something out, what would you say they should consider in terms of the different types of cover?
Yeah, so those covers that we've mentioned so far, in most cases, all of them probably in an ideal world would be in place. You know, if there are shareholders in the business, there's key people in the business, and there's potentially a loan in the business as well, then you can start to look at all of them. Obviously, once you've kind of got that suite of, well, this is what's on offer, you can start to prioritise, see what the costs might be. If you're working to a budget, you can make changes from that full suite of options available. But I would certainly say consider all of them, because chances are that there is a need for all of them, and then go from there.
Great, thank you. So just to summarise for our listeners, what would you say that they should be thinking of in terms of looking at protecting their business?
I think the main thing would be if you look at key individuals and shareholders and try and imagine or forecast what might happen to the company if they were no longer able to work. As I say, from a point of view of if they were to pass away unexpectedly, suffer a critical illness, what would happen to the business? And in most cases, it's the people within the business that will have a better idea of that than any calculation or anything we could necessarily tell them. So I would say have a think about what your business looks like, who are the key people involved, and what would happen without them. And if there's a gap that you would struggle to fill, then that's where protection can help.
And it's worth getting the accountants involved with that discussion, isn't it?
Absolutely, yeah, especially on the shareholder side of things. If you're struggling to kind of work out what the value of your business might be, the accountants can come in and help. Equally, when policies are put in place, the tax treatment of premiums, the tax treatment of any sum assured, all that kind of stuff will involve the accountants. So important to have them involved, and the solicitors as well, looking at things like the business will, the shareholder agreement, all that kind of stuff. So there's plenty of people that will need to be involved in getting it all in the right place.
Great advice, Jamie. Thank you. So with regards to one of the random questions, a little bit more light-hearted, if you could do anything and money was no object, what would you like to do and why?
My answer's probably changed recently, actually. I've been up to Scotland in a camper van over the last couple of weeks, and I think get a camper van, deck it out, and just go and travel. Go and watch some golf in every area of the world. Go and watch the cricket. Can't think there'd be a much better way to spend the time than that.
So bum around the world.
Exactly, yeah.
Fantastic. Well, thank you, Jamie, for your insights today. This podcast is part of a series we have recorded Please make sure you subscribe to our other podcasts. These are on Hooper estate and tax planning, protecting your assets, retirement planning, growing your wealth, cash flow planning, employee benefits, and business succession planning. As always, the information provided in the podcast are general in its nature and shouldn't be relied upon without seeking further professional financial advice. If you'd like to speak to someone regarding your personal circumstances, please feel free to get in contact with any of the advisors for a fee-free, no obligation consultation. Thank you for your time and thanks for listening.